Hi, welcome back. We are discussing about financial accounting and reporting fundamentals, KE1 March 2016 question paper. Now let's discuss about question number 5. So what you can do is you can go through the question because I have already gone through the question. Straight away I'll move on to the calculation part of it. Just pause the video and go through the question thoroughly and then come back to the answer. Okay, so just pause for 5 minutes and come back to the answer. So if you analyze this question, this is all about preparation of profit or loss account for Raj traders for the year ended 31st December 2015. So you are required to prepare a statement of profit or loss for Raj traders, okay, which carries 10 marks. Okay, so straight away I'll go to the calculation. I'll start with the trading account. So for trading account you need sales and cost of sales. Now here the cost of sales is not given, so therefore cost of goods sold, you need inventory, opening inventory and closing inventory and purchases. So here the purchases are not given, you are given the bank account, cash payments and receipts. So therefore purchase of trading stock and payments to suppliers, these are the two available information to identify the purchases, and also you are given the trade payable. So trade payable, the opening and closing balances are given. So through this account you need to identify the purchases. Okay, so let's calculate profit or loss account for the year ended, you just mentioned 31st December 2015. Am I right? This is 31st December 2015. Yes. So I will start with sales figure. Sales. And sales also not given. You are given the receipts from receivables, and which means you have received from your customers on credit sales. You have received this amount. And what is this sale? This should be cash sales. So straight away we can take the cash sales 1.1,846. So cash sales 1,846. I'll just give all this information in thousands. So 1,846. This is cash sales. What about credit sales? Credit sales. You need to identify credit sales through your trade receivable account. So trade receivable account, take the opening balance, brought forward balance, and take the closing balance, carried forward balance from the information given. Trade receivable, you have opening balance 440, right, for 40,000, and closing balance is 840,000. Then how much has been received during the period? 2,480,000. So 2,480,000 you have received. Bank account debit, credit 2,480,000. Is that right? 2,480,000. Yes. So how much is the balance? 2,933,000. 3,320. So 3,320 minus, if you use your calculator, minus 440. So it will be 208.80 sales. Okay, so you can say 2,880,000. So how much is the total sales? 1846, 4,726. 4,726 will be your sales. Is that right? Now we will move on to the cost of sales. So less cost of sales. Okay, so cost of sales, I'll just working number 1 is credit sales. This is the working number 1. You can show working number 1. This is working number 2. Okay, so working number 2 is cost of sales. You understand? So what is the opening stock? Take the opening stock. Opening stock is how much? 840. 840 opening stock. Then add purchases. Purchases you need to calculate through the trade payables. Apart from that, there is cash purchases as well. So therefore you can add purchases 139, and there is working number 3 to identify trade payables. Trade payable account, credit balance is the opening balance and carried forward balance. How much is that? Trade payables, opening balance 550,000, and closing balance is trade payables 640,000. How much has been paid? Payment to suppliers 3,040,000. So 3,040,000 bank credit, debit, trade payables. This is a bank account. So how much is this? 8, 6, 3680, 3680. So balance will be 813130. So 3130, this is credit purchases 3130. So if you add this 3,269, no? 3,269. If you add up these two, 9, 10, 9, 11, 4,109, less the closing stock, that will be, closing stock will be 980. So if you deduct 980, you will get how much? 3,129. Is that right? So that will be your cost of sales, 3,129. And your gross profit will be 3,129, will be 1,597, 1597. Okay, so up to gross profit we calculated. This is a gross profit. Let's move on to the other expenses. Now let's continue. Less expenses. Okay, less other expenses. Let's move on to the rent expenses. Paid 188,000. However, you are given accrued expenses, rent, closing is 44,000, and there is prepayment account 20,000. Okay, so Straight away what you can do is you can prepare a T account, or otherwise you can simply take rent, how much has been paid. First you take the paid amount, rent 188,188 plus the prepaid. There is a prepayment of 20,000, so it's a debit balance. Okay, opening balance is a debit balance, so when you make the payment you debit the rent account. Okay, so therefore you need to add prepayment account 20 and minus you have the rent accrued expenses 44. That is also should be added back 44,000. Okay, for example, if you take the rent account, you had a prepayment balance of 20 and closing accrued expenses, okay, should be 44. So therefore this is a carried forward balance. Okay, and you paid 188, so bank credit, debit, rent account. So therefore this 20,000, 188, 44 should be added. So once you add, how much will be the amount? So that will be 252. Okay, so 252 you have to minus. Then let's move on to the other expense, telephone, 32,000. So we'll take telephone expenses. Telephone, how much has been paid? 32,000. Okay, just check whether there is any opening prepayments. There is no prepayment account, but however accrued expenses are there, opening and closing telephone. So therefore if you take the telephone account, accrued opening and accrued closing. So how much? Accrued telephone opening 4,300, closing how much? 6,300. How much has been paid? Telephone 32,000. Okay, so 32,000 has been paid, bank credit, here debit. So therefore 32,000 plus 6,300, which is 38,300, 38,300 minus 4,300, so which will be 34,000. So basically 32 plus 63, 6.3, okay, minus 4.3, so that will be 34,000. Is that clear? Okay, now let's move on to the other expense. Now we took rent and telephone. Electricity expenses 98,400. Okay, so simply you take electricity, how much has been paid? Electricity paid 98,400. So 98,400. Check whether there are any prepayments. There are no prepayments. However, electricity accrual is there, end of the year 1,600. So simply what you should do is you have to add this amount is a closing accruals. Okay, so 98.4 plus 1.6 will be 100,000. So minus 100,000. Now let's move on to the other expense, which is insurance, 140, 100. So insurance expenses 140, 100. Check whether there are any prepayments. Yeah, insurance, there is 4,100 prepayments at the end of the year. There's no prepayments in the beginning. Okay, no accruals. So therefore, what you should do, you have to minus this 4.1. Why minus? If you take the insurance, okay, no prepayments, you understand? Beginning, no prepayments. Closing, there is prepayments 4,100. So there is a payment of 140, 100. So therefore, how much is the difference? How much is the actual expense insurance? You take the difference. So that will be insurance 136,000. Okay. Now let's move on to the other expenses. Salaries. Salaries, check whether there are any prepayments, no prepayments, no accruals. Okay. So therefore straight away you can take the salaries 232. So I'll just take it here. Salaries 232. 232. Then selling and distribution expenses 260. Are there any accrued expenses, prepayments? Nothing. So 260 straight away we can take selling and distribution to 60,000. Okay. Then what about the purchases of equipment? This is relating to assets. We have non-current assets, book value. The book value is given. So book value means after depreciating. So you are given the opening and the closing balance. What else? Okay, there is proceeds from sale. So definitely there should be a disposal. Okay, so we'll move on to the third note. On 31st December 2015, Raja sold a motor vehicle for 648,000, which he bought for 2.8 million on 1st July 2012. The business depreciates motor vehicles at 25% per annum on straight line basis. No other non-current asset items, okay, other than those mentioned above were purchased or sold during the year. This is a very important note. No other non-current asset items other than those mentioned above were purchased or sold during the year. Other than nothing has been purchased or sold. So therefore, and also you are given the depreciation rate only for motor vehicles. Okay. So now let's calculate the profit or loss on disposal of asset. There is some calculation to be done. When did you purchase 2.8 million? Okay, this is working number, you can say working number 4, disposal of motor vehicle. Okay, so how much is the sales proceed? Sales proceed 648. 648 less the net book value. Okay, less the net book value. How much? You bought it for 2.8 million and depreciation is 25%. How many years? How many years you need to depreciate? So this is from 2012 to 2015. Okay, so 2012 6 months, then 13, 14, 15 3 years. So 3 years and 6 months. So if you calculate 3 years and 6 months, how much will be that? So that will be for 1 year 700,000. For 3 years 2.1 million. For 6 months 700 is the full year depreciation. Take the half. 350. So that will be 2450. Okay, so 2.8 million original cost, 2.450 the depreciated amount. So the net book value should be 350. So what is the profit on disposal? 298. So I forgot something here. You need to add disposal profit. This other income has to be added here, 298. Okay, 298. Okay, now let's move on. Then apart from all these expenses, now we have considered all the expenses. Now we have done the disposal profit. Now what is left is the depreciation. Now the depreciation, you need to deduct the depreciation part. Okay, depreciation. How much should be charged as depreciation? Since you are given the non-current assets at book value, simply you can take the difference. 4284 minus 3780. Please remember the disposal has been recorded here. So therefore the 4284 minus 3780 should be 504. Okay, then what about this particular purchase? Do you consider this as an asset, non-current asset? So you can't consider this because of this node. No other non-current asset items other than those mentioned above were purchased or sold. Apart from this 2.8 million, no other fixed assets, non-current assets were either purchased or sold. So therefore this cannot be treated as a purchases of non-current assets. So therefore you need to write off. So write off means you can add under depreciation 248. Okay, so either you can show the total amount or depreciation. This is treated as full 100% depreciation for equipment. This is the equipment depreciation. So apart from that, there are no other adjustments to be made because this is a bank account. Proprietors withdrawal, this is to be adjusted in the balance sheet, and the cash book balance is this one, end of the year. This is the opening balance. So we have taken all the adjustments. So let's move on to the final figure, the net profit, whether net profit or loss, that calculate. So the total figure is 129. So that will be the final answer. So if you have any difficulties, if you have any questions relating to this, please comment below. And also if you have any difficult questions, please comment below. I will discuss those questions whenever I have time. Keep watching the videos. If you like the video, please subscribe the channel. I'll see you soon with another question and answer discussion session. So thanks for watching. Bye for now.